How's it going, everyone? Hope everyone is well. So we're gonna get started very soon. Just see who else will be on for this workshop, this session. Um, had a great success for the last price action workshop. This is a kind of a different topic, but I do want to go in more detail about backtesting, specifically on these particular topic, why we backtest, the benefits of backtesting, in a technical and psychological perspective, and at the end I'll go over kind of how we backtest. I made several videos on how we backtest, so if this video isn't clear, you can go on my YouTube or TradingView. I have a few more backtesting videos on different market if you're interested, forex market, indices, crypto, etc. There's more videos in that topic, but I will go over them. I'll go over how I would use TradingView's feature to backtest, and specifically we'll have time for Q&A at the end. Okay. Hey everyone, nice to see you all. Good morning, good morning. Nice to see you all. So I think we'll get started now. We'll talk about backtesting from someone who hasn't heard about backtesting or isn't aware of why we backtest and etc. And then take it from there. And if you have any questions, you feel free to just type it in there, and if I see it, I will go over them. All right. So, like I said, today's workshop, we're not gonna look at the charts necessarily too much, but we'll talk about the benefits of it. We'll use a few chart example to kind of go over how we backtest and etc. But it won't be a market update or anything like that I usually do. Okay. So why we backtest, I think this is the most important aspect of why we backtest, right? I have talked about these in a couple of videos before, but really the most important part is these two benefits, right? There is a technical benefit and there's a psychological benefit of why we backtest. Okay, so just from doing a lot of these coaching sessions, doing a lot of these interaction with people, I often ask, do people backtest? Do you guys backtest? And a lot of times I hear the answer is no. They're either unaware of how to backtest or doesn't really understand what backtesting is. And I usually spend a little bit of time going over why you should backtest and how it should benefit from you. Okay, so let me start giving you all a few examples here. The whole reason why we backtest is that we first of all, need to get familiar with your strategy, right? With your strategy, its probability, and its strike rate. So we're talking about technical benefits now. So if it doesn't matter, it doesn't have to be every strategies are different, right? So everyone trades different strategies. You could be trading support resistance, right? You could be trading some EMAs. You could be trading Elliott wave. You could trade, there's all sorts of different strategies. It's all about when you are not familiar with the strategy, you need to work on it. It's kind of like doing the homework. You're looking at previous chart patterns, you're looking at previous price action, previous data, and you're backtesting your strategy so that you see it play out, to its advantage. Okay, so, and as you do more backtesting, you will learn and you will tweak your strategy to your likings, because you don't necessarily have to trade the same support resistance like everyone else trades support resistance. Maybe you can adapt to a new way of identifying entries, new ways of identifying how to manage a trade, how to set a stop loss, take profit, etc. That's what an actual trader should do, is actually understand that you don't necessarily have to copy what other people do. You need to evolve yourself from other traders, and that's how you're going to become a better trader than everybody else, because you need to put in the time, you put in the effort to make that work. And also practice how to set your entries, right? A lot of strategies will tell you this is what you should do, set the entry here, set the stop loss here, set the take profit here, but you should use real life examples of how that's going to help you, right? Use the actual chart, actual price action that has happened, backtest that strategy so that you see it play out and you understand how your strategy should work, how to set your entries on your strategies, and etc. Okay, so Let's take a look at a few examples. I just talked about all the technical aspect of the main point, but let's take a look at a few examples that I'm going to do. And I'm just going to go through a few different examples that I have kind of previously circled out, and I'm just going to give you guys kind of a broad perspective on them and kind of take it from there. Okay. So when we see some move happen, when we see particular, let's say, when we're looking at a potential move, the whole point of backtesting is we need to see a move that has already happened. Okay, so a move that has already happened, and that kind of move kind of fits your strategy or whatever style that you're trading, and you want to backtest that so that you find out, well, this impulsive phrase has happened. Do we have a strategy? Do we have a method to capture a move like this? Right? That's why the whole point of backtesting is now is you know that we trade for some of us who trade price actions analysis, we trade impulsive move of the price action. Do we have entries here? Do we have ways to capitalize on it? And that's why we backtest to see if our strategy can work in this kind of setting. So I usually what I do is I believe you need the pro version for TradingView. You need to replay this. This is a replay button on the top. So what this does is it set the time all the way back to whatever time you want like this. So pretty much we know, we saw this move has happened, but I can replay this move before it happens and kind of look into the price, look into the price action to see if there's a potential entry. Right? So you have to do this for every single pair, every single different market in order for you to get better as a trader. A lot of traders, new traders especially, they don't do this because they think it's tedious, they think it's a homework, they don't want to do this. Well, um, the truth is, if you don't do this, you're not going to get better as a trader. You really have to put in the time and effort to make this work. Okay, so we saw this move happen, right? We saw this move that we have this kind of a descending channel or falling wedge. We understand that this is a reversal correction. So for our sake, we know that there is likely to be an impulsive move in the market. So when we know that that move has happened, when we see that move has played out, is there strategy? Was there entries for price for us to get in? And this is something that we do. We backtest, we press the replay button, we go back to where the previous move has happened, and we kind of just zoom into the price to see that is there any lower time frame movement. So you see that price continue to correct down, and then we know that there is a big reversal impulse up. This is that impulsive move that's already happening on the lower time frame. And we know when we're trying to capture some move like this, we're looking for correction, right? You always hear me talk about videos, you always hear me talk about wait for confirmation of a correction, and that's exactly what I'm waiting for here. So if the price continue to move up, and eventually we need to see a period of consolidation, which is right here, right? You can see that there is a consolidation period here, and that we have an impulse down followed by a reversal impulse. As you guys know, this is something that I made several videos on. When we see an impulse down followed by a reversal impulse, that means that the bearish momentum, the bearish market is no longer valid. It's exhausted, and we're seeing that the overall structure is playing out. That we capture the first impulse move, followed by the first correction. Right, so that is something that we can capitalize. Fits our trading plan. It fits the way how we identify impulses and correction, and we're looking for the next impulsive move to the upside. As you can see, that correction form, and then we just pretty much push out for the price. And then second thing we ask is there another entry? Remember, we talk about when the higher time frame correction completes, when the price breaks out, there's sometimes going to be a correction after breakout, right? This is one of the entry I always talk about. So that could be the second entry that we know. And to effectively use backtesting is we can use the long position or short position. This is the box that we can put in, and we fit it to our plan to pretty much set a potential entry here, and you will adjust your stop loss accordingly. You know that we're looking for the previous high, etc. And that's how you can know that if you're at this situation in a live condition, will you enter a position like this? How do you set your entry? How do you set your stop loss? How do you set your take profit? Because you know the move has played out. We know that this move has played out, and now we know the move to the upside is working. but we need to find out if our strategy can work towards that. Do we have a very good strategy to capture a potential move that's going to give us some profit in the long run? And you can see as you replay the button, this is how you can tell that as the move up and down, move it down, does it fit in your entry still? Does it fit into your management? And then eventually, does it hit your stop loss? Does it hit your take profit, etc.? Okay, so that's one example, which I'm going to do several to kind of show you why we backtest and what's the whole point of backtesting. And you need to do this for every single pair, every single market, and you just need to put in the time to do it. You can't just be like, well, I'm just going to watch the price. I'm just going to look at this and be like, well, I saw impulse happen, but did you backtest? Did you see it that within this impulsive phrase, was there entry for you to enter? Was there confirmation for you to take advantage of this impulsive move? Okay, so work on this, work on the aspect of this, because that's going to help you. We're going to get into the psychological part later, but this is going to help you to shape your mind to identify these strategies, identify these setups. You're going to build a lot of psychological benefits, right? You're going to remove FOMO, you're going to remove fear, you're going to build confidence in yourself to identify these strategies. Okay, so remember, going back to what I mentioned earlier, we learn our strategy, right? We learn and tweak our strategy. This is why we do the back testing. Okay, so technical aspect, I think it's pretty straightforward. We talk about this many times, right? Identify your strategy, probability, practice your entry, stop loss, and take profit. Prevent yourself to overtrade and all that. We're gonna go over that more into the psychological part later. But that is the technical aspect, right? This is the technical benefit of you doing backtesting. I think it's pretty straightforward. You know, rewatch this, understanding why we do it. It's very important. Okay, so that's going to get into the psychological aspect. I think this is the more important aspect of why we do this. Technical aspect, I think it's understandable. I think we all know that we need to get better at technical aspect, but why do we backtest for a psychological benefit? Well, we talk about removing FOMO, we talk about fear of losing. I'm going to give you a few examples of these on the charts, and especially that we're building confidence. A lot of traders, when they're trading, I often hear one of two things. It's either going to be fear of missing out or fear of losing, meaning like their fear of losing a trade, so they're not entering the trade, even though they already planned an analysis on it. They're telling yourself, well, if I see a correction finish, I'm going to enter here. And at the end, they didn't enter because they're in fear of losing this particular trade, and only just to see the trade takes off without them, and they're going to get more emotional. So, well, here's a solution to all that, right? The solution is to remove fear of missing out and remove fear of losing by backtesting, right? This is the whole point of us backtesting any strategies or anything in the market, so that we remove these biggest issue that often I see from new traders or even experienced traders. They sometimes have FOMO, they sometimes have fear of losing. So let's take a look at a few examples here. So this is probably a very good example of fear of losing. Okay, so fear of losing we talk about is the fact that you plan an entry, you plan a setup, and at the end you didn't execute it just to see the price take off without you. Right? This happened to many traders, right? This happened to traders all the time when, let's say, they're planning a position like this, they see a higher time frame correction. This is clearly a higher time frame correction. This is an impulsive move followed by a higher time frame correction, and we break out of the higher time frame correction. As we know, I'm looking for correction after breakout, right? This is a typical entry I always talk about in my ebook and in all my lessons. We're looking for the next impulsive move. Well, the move plays out beautifully, hits your target, hits your take profit price, whatever, but you didn't enter it, right? Many of us experience this, many traders experience this. You didn't enter it, you didn't set a stop loss, you just didn't get involved in this trade, but only just to see the trade takes off without you. And that builds more emotional distress, that builds more emotional negativity into your trading. So how to prevent that? exactly what we do. We do back testing, right? When we do the replay button, we go back to before the price has take off, and you're looking at, is there any particular entries? Was there any particular setup that you can potentially capitalize on? And then that is how you're going to build confidence, because now that you know that you have seen this impulse move play out, and you have seen that there is potential entries along the way, and that's going to help you to be more confident to identify these. And the next time in a live market condition, when you actually execute a trade or when you're actually looking to enter a trade, you won't hesitate, right? People hesitate, they're worried, they don't want to pull the trigger, and at the end, just to see the trade take off. So that's the solution here, right? We do the backtesting, we see this higher time frame structure, we know that the higher time frame structure is about to complete, we're about to have a breakout for the price. So let's see how the price develop. So we have that first breakout for the price, right? This is clearly a impulse move out of this higher time frame correction. And was there a lower time frame correction? And this is what I always said. Was there a correction after we break out of the higher time frame correction? There is, right? There is a few swing highs, a few swing lows. This is again a correction after breakout that I always talk about in my entries. This is prime example of why we backtest, because we see the price always going to form this kind of correction before the next impulsive move, because this leads into a higher time frame impulse, leads into a higher time frame push for the price, and we know that on the lower time frame we're likely to get continuation correction, which is in this case, and that is a prime example to look for a potential entry. We use the toolbox up here. We set a potential entry above the correction. We know that we can just put the stop loss below, and we're looking for the previous high somewhere here in the area as a potential target. And 3.8 to 1 roughly, we know that we're looking for at least 3 to 1 this reward. So that fits our management, that fits our trading plan, and that is a trade that we can execute in the future. We know that the higher time frame has finished, right? We know that there's impulse, there is a correction, we're looking for the next impulse. Basic understanding of price action, and there is that particular entry that we can capitalize on based on our strategy. Everyone trades differently, everyone has different strategies, so don't need to worry about if you're backtesting a different strategy than what I'm showing you. You can backtest any strategy you want, any methods you want, as long as you can use the replay button, as long as when you know what you're doing. You're doing this to train yourself to be as a better technical trader and better trading psychological benefits for yourself, so that you don't fall into those mistakes. Okay, so that's an example on another backtest. So let's go back to the chart here. Any questions so far, guys, on any of these that I talk about? Any of these examples or any of these topics I just mentioned? How do you realize that's not a fake breakout? That's why we wait for confirmation, right? Same example on Kiwi Yen that we just talked about. Higher time frame correction, we have a breakout. So how do we know that's not a false breakout? Well, we wait for the lower time frame continuation. This is what multi-time frame analysis is super important. If you're not familiar with our multi-time frame analysis, watch a few of my videos. Watch my price action workshop that will explain it more in depth, more in detail. But we wait for the lower time frame impulse. We wait for the lower time frame continuation, so we know this move to the upside, completing this correction isn't a false breakout, is a confirmed breakout now, and we enter something like this for the next impulsive move. Okay, so that should be a prime example of it. Okay, and we talk about entering the trades without hesitation and doubt, right? So kind of relate to fear of losing. Often people are afraid to enter a trade because they're fear of losing. So they're hesitating, right? They're having doubts with their strategy, or they're having doubts with their entries. Whatever it is, it's a psychological side of things where the trader themselves is not looking to enter because they're afraid. But if you've done enough homework, right? If you've done enough back testing to see your strategy play out, to see the movement from the market over and over again, it's going to help you eliminate these psychological issues with trading. Okay, so let's take a look at another example here. I want to look at Kiwi Cat here. Kiwi Cat had a really strong kind of bearish move on the price. We know these type of stuff. If we look at from a higher time frame perspective, right away I see that potential double top in the price. So this is a higher time frame double top. We have a higher time frame ascending channel, and we have a lower time frame ascending channel. So already multi-time frame analysis. A higher time frame at the time is screaming bearish to me, and we're looking for, is there any potential entries from the top here? So we use the replay button. This is why we do backtest. We go back to when before the move has happened. So we're looking for clues, right? We're looking for entries, we're looking for confirmation, and most importantly, we're building confidence in our trading strategy and trading style. So all this confluence that we mentioned, let's look at into kind of a lower time frame now. Was there any entries? Was there any potential clue from the market for us to able to capitalize a move like this? Remember, there's no strategies that can tell you to capture from the top and all the way from the bottom. It's not possible. It's not sustainable. There's no way of you entering here with a very tight stop loss and then capture all this move and just happen to exit at the very low. People often do like to post those on social media, but that's not the case. You need to wait for some sort of confirmation for any type of strategies, any type of style, in order for you to capture a potential run. You may not necessarily capture the entire run, but you can capture some of it or most of it, and you need to do that consistently in the long run, and that's how you can be a consistent trader. So let's start replaying this and see what will happen. Well, we see that there is a top here. We know the higher time frame double top, and guess what happened? We have an impulse up, and instead of continuation correction to go higher, we just have a reversal impulse down. So pretty much an impulse up, reversal impulse. So that's a strong trend change, strong bearish momentum kicking into the market. And we're looking for confirmation. We're looking for, is there any continuation along this way here, along this correction here? If we look closely into the lower time frame, right, there is a correction here. There is potential a period consolidation here as well. So depending on how you see a correction, how you take advantage of the current price, there is consolidation, right? There is consolidation here. And within our trading plan, within our trading strategy, we're looking for any type of lower time frame continuation along this move to be able to capitalize on it. You can either enter a trade that's within the ascending channel, that's one way of entering, or you can enter after the price breaks out of that ascending channel, and that's another option as well. Right, so we're pretty much waiting for this move to happen, right? There is a correction of the breakout, right? So this impulsive move happened, we break out this ascending channel, and now that there is a potential continuation correction. So that's good, right? That kind of fits in our plan. If you're looking for an entry like this, again, using the toolbox, you can set a potential entry like this, and you're looking for the recent low as a potential target. Does it fit 3 to 1? Does it fit your plan? Does it fit your strategy to enter a position like this and looking for a potential move to the downside? As long as that fits your plan, fits your way to enter, then this is a correct entry and you want to see how it play out. And you just continue play the replay button to see if there's any different movement from the price. Does it continue to the downside or does it have anything else that arises from it? So you can see before the price is breaking out of this higher time frame structure that we're currently in, there is another period of consolidation here, right? So you can classify this as another correction, and you can see if this is justifiable for you to enter from here and set a stop loss to a low. And this is kind of what the question I always get is people kind of looking at these entries and they're kind of asking themselves, well, should I be entering here in the future? Well, using one example here is simply not enough, right? You need to backtest more pairs, more different market to see if you're looking to enter something like this, is it feasible? Does it make sense? Is it probable for you to enter something like this in the long run? Okay, so that's just a capture here. And as you can see, price eventually just impulse down, hitting this kind of previous low, and that gives you about 4.2 to 1 or something like that. And that is the way how you backtest, right? So now that you know all the confluence that I just mentioned from a higher time frame perspective, let's rewind that. Right, we have the higher time frame double top, we have the higher time frame ascending channel, we have a lower time frame ascending channel, and we have an impulse up followed by a reversal impulse. First correction here, second correction here, third correction here. So whatever correction that fits your trading plan to execute. Personally, I would always think the correction after breakout would be the most ideal entry because the impulse move already confirmed. We broke out of this ascending channel, so this is a lower time frame continuation correction. Remember, it's not about right or wrong. I'm going to repeat this whole session. The whole point of us doing the backtesting workshop and backtesting is not to show if I took a right entry or if I took a wrong entry. There's no right and wrong. Understanding that if I take an entry here, I confirm the impulse, right? So I confirm the impulse, so that's a good plus for me to enter a trade, but I also miss out profit if I didn't enter here. Whereas somebody entered from here is not wrong in any way, it's just that you haven't seen the impulse move has happened. So there is a small chance that price can just push down here and bounce back from this ascending channel because the correction isn't finished. So you may get tagged out, you may take a loss, but by entering here, you maximize your risk reward, right? So everything we do in trading is double-edged, meaning that there's pros and there's cons. It's not right or wrong. It's about what suits you as a trader, what suits you as in your trading plan, in your risk management. Some people like to take riskier entry, like might even enter from the top for a reversal order. Of course, that is good for a risk reward perspective, but you might likely to take a few losses here because price hasn't shown any confirmation bearish move yet, and then just to drop after, right? So it's all about identifying what suits you as a trader. Myself, who enters something like this, I may not get as much profit for somebody who gets it from here, but I care about my risk management. I care about conserving capital. I want to wait for that confirmation impulse breakout, and that's me as a trader. Whereas somebody who are looking for a little bit more aggressive entries, they're looking for the top here. And again, it's not wrong, right? It's not wrong to be looking for a move like this as long as you understand the risk involved, right? The riskier trade that you're entering from the top without more confirmation from this point, and you're likely to take a few losses, but if you capture that run to the downside, you're going to make back all your losses and then some. Okay, so that's a little bit more about the psychological part of things. What are your favorite time frames for identifying bigger moves either up or down? It's not a specific time frame, so we always talk about its multi-time frame analysis. So if you're on higher time frame, which is anything higher daily and weekly, usually I just use daily for higher time frame perspective. We always use higher time frame to identify any potential move. You want to have a bias on a higher time frame, knowing that this move is likely to play out, and you go down to the lower time frame for possible confirmation, for possible entries, right? So it's about multi-time frame analysis. So what will you say about your strike rate? Yeah, this is a good question. For you to be a 3-to-1 trader like this, this is why I always talk about you should look for an entry like this, at least 3-to-1 risk reward, because even if you're not a good strike rate trader, like you are below 40% or 30%, which is normal, okay, this is average actually, you can be a 40%, 30% strike rate and you can still be profitable because out of the 10 trades that you take, let's say 3 trades went to wins and 7 trades went to loss as an example. But my 3 trades, I'm earning 3-to-1, so I have 9% at the end. 7 losses at 1% is 7%, so 9 minus 7, it still equals to 2%. So even with a 30% strike rate, but if you can make sure you get 3-to-1 risk reward, at the end of the month, you are still profitable. Okay, and that's the most important part about trading is you need to be consistent. You need to be sustainable. You're not here to make ridiculous return in a month because you're likely to over leverage, over trade, and over pretty much a revenge trade if you take losses, right? You want to be here for the long run. You want to be consistent. You want to be sustainable. Then find an approach that is more suitable as a trader. Okay. How do you manage your emotion when you have losing trades? There's a lot of ways of managing your emotion, but most importantly is to accept what the market is. Remember, this is what I often hear from new traders where they take a loss and they're kind of finding out why I have a loss and they couldn't figure out what went wrong. And here's the thing that you need to make peace with yourself. This is why we journal our trades. A lot of new traders don't journal your trades. You must journal your trades to find out what went wrong and how the trade went. When you journal your trades, when you look back at a position, did they fit your plan? Does it fit your trading plan exactly when you execute a trade? And did the market just turns out to be different? The market can do whatever it wants to do. Acknowledge that right now. Right? Acknowledge that the market can do whatever it wants to do. It does not need to follow your plan, my plan. It does not need to follow someone else's strategy, whatever it is. The market can do whatever it wants to do. It can move sideways, it can move up and down. It doesn't matter, right? So make peace with yourself, make peace with the market. Okay, no strategy out there can capture every single move, every single run in every single market. It doesn't make sense, right? Some strategy allows you to be buying here, but they're not capturing the sell. Some strategy capture the sell, but they're not giving you the buy. So stop jumping around your strategy back and forth. It's not going to help you. Again, let me repeat that. No strategy out there can capture every single move, every single run. This doesn't make sense, right? If you want to trade support resistance, you trade support resistance, but you're going to miss out on some of the impulses move. If you trade impulses move, but you're going to miss out some support resistance. That's the way it is, guys. You cannot capture every single move in the market. That kind of answers that question. Which is better to stick to one strategy, trendline strategy, or using different strategy? That is all actually up to you, of course, as a trader. You can find a strategy that works for you better as a trader, right? Some people jump strategy because they haven't seen it play out and they're just trying to find a way they can get rich quick or find a money they can make profit on. Find a strategy that makes sense to you, right? Find a strategy that makes sense to you. Some people like to trade support resistance, that's fine. Some people like to trade Elliott wave, that's fine. Some people like to trade the EMA lines, they like to use those indicators on the bottom. Sure, nothing wrong with that as long as you identify does it suitable for you as a trader. Some trader want to be more risky, some trader want to be more conservative. So you need to find a strategy that works for you best. You can look at other people's strategy and that doesn't make sense to you. Do you want to execute this position like this, right? That's something that you should think about, right? Don't just blindly, jump to strategy, looking at people's lessons or courses, and you're just like, oh, that person works out, right? So, for example, if for myself, who I trade these impulses move, I understand what I'm looking for. I understand what it suits me as a trader, and I execute the trades. I learn about it. I become a better person at identifying these, and that's how I get better at these setups. But if I was trade support resistance, which I don't have a click with me, I don't doesn't necessarily fit me as a trader, then I'm not going to trade that strategy, right? So find something that works for you and you only. Okay. How do you get ready for how do you make the pain go away and ready for the next trade? That's a good question, but it's just all about a psychological side of things, right? You need to pretty much train your brain, right? This is why we continue to backtest, right? This goes back to the same topic of why we backtest, right? We backtest so that these kind of emotional things doesn't happen to us again, right? These kind of emotional things doesn't happen to us again. You're mentioning about how to kind of make the pain go away after taking a loss. Well, losses happen, right? Everybody take losses, okay? Whoever tells you that they don't take losses is obviously lying to you, okay? Any professional trader, any consistent trader still take losses. It's part of trading. So forget about what you see on social media, someone just posting profit after profit after profit. It's not it's not likely to be real, and it's not likely to be sustainable either. Okay, so don't get tricked on those social media pulling their MT4 accounts showing profit after profit. Okay, you don't know if they're real, they likely to be demo or they likely to be Photoshop. Who knows how they do it? Doesn't really matter. Focus on yourself, right? Focus on yourself. Understanding that taking losses, it's part of the game, right? It's part of trading. It's a business, right? When you have a business, you're gonna have profit, you're gonna have losses, which in other terms, they're gonna have revenue, they're gonna have expense. It's the same idea here. You cannot have no expense in the business. It's not possible. Just like you cannot have no losses in trading. It's not possible either. The whole point is to minimize your losses, meaning minimize your expense, and maximize your revenue, meaning maximize your profit, right? So that's what we can do as trader, right? We consistently making sure our risk is at a minimum, right? We usually talk about we risk 1%, and then making sure that our profit, our reward is at least 3 to 1 or something like that. That's something we can control, right? We continuously control our management in this way. We don't overtrade, we don't revenge trade, or we don't over leverage that. We don't that. So a lot of traders, when they get into the market, they would never trade 1%. They're gonna deposit their $100. They're gonna trade $5, $10. They're gonna risk 5 or 10% account, and then just to see their account start depleting, and then they get angry, they start revenge trading, and eventually they blow their account. And then the same cycles happen over and over and over again until they have no money to deposit or they give up in trading. That is a cycle that most trader goes through. Okay, so make peace with yourself. Do more backtesting so you're comfortable and you're ready to move on. Understanding losing is a part of trading. Okay. That's a very good. Yeah. Risk 1%, accept the loss before the trade. Perfect. That's exactly what I'm saying. Yeah. So Hendra says that's before a trade. What I mean is after the trade and having losing streak, I can't make the pain disappear. Well, I usually say when you take 2 or 3 trades losses, take a break, right? Take a break after you take 2 or 3 losses. Maybe take a day or take 2 days off, and then come back to the chart, right? After you take a few losses, keep looking at the chart is not going to help you, right? Because all you're going to think about is to try to revenge those 2 losses or 3 losses. It doesn't help you as a trader. So take a few days off, right? Close your computer, log off your charts, whatever. Don't look at the charts, and come back when you are ready. Okay. Can you talk about stop loss and how to define its amount? I made several videos on this. If you're interested, this is kind of a little bit away from talking about. You can watch all my videos on here. 3 entries, how to say stop loss, etc. There's a bunch of videos that talk about it. But I'll go over a few more examples. Okay, I'll go over a few more examples to kind of go over and then take it from there. When do you close after impulsive move? Again, there's a few videos I made on this. I'll go over this in the video, but how to set take profit for your trades, that's also in this playlist as well. So there's more detail here, but I will go over this in a few examples here in the backtesting videos. So we talk about this is an example of backtesting, but I will talk about the stop loss. I will talk about the take profit as well. I think that all fits into this next example I'm about to show you. So again, we're gonna talk about backtesting because we understand that the benefits of backtesting. So let's take a look at this example here on dollar yen. So dollar yen, again, right away we start from higher time frame, multi-time frame analysis. So before this move has played out, we've been talking about, or at least I've been talking about this move all for a really long time in my streams, right? Those of you who follow me since the beginning of this year will know that I've been talking about this dollar yen position for quite some time. So we understand that there is a strong impulsive move in the market, and this is a higher time frame correction, right? This is clearly some sort of flag, some sort of channel. We know that this is a higher time frame correction. And as we dig deeper here, we're slowly seeing a descending channel here, right? This is another correction. We know that this is typically a reversal correction in the making, and we're looking to see if we can capture a potential move to the upside. So we go down to the lower time frame here. The key here is to identify, is there any setups here in the market? Was there anything here for us to be able to capitalize on this? So let's take a look. So you can see here that if we zoom out here, we see a potential move right away, because within this descending channel, right away I'm seeing that there is another descending channel. So there's a descending channel here within the larger descending channel. Again, you're going to hear me say multi-time frame analysis now, right? So lower time frame descending channel, higher time frame descending channel. And do we have more confluence? Of course we do. We have a inverse head and shoulder pattern, right? This is an inverse head and shoulder pattern in the development, and we have an impulse pushing down and a reversal impulse pushing up. Okay, so that is the key here. And we talk about, this is the outlook that we can start looking at, is we see a inverse head and shoulder, we see that descending channel, and we see that higher time frame kind of flagging channel. So all that multi-time frame analysis is going to give you that confluence to look for a potential entry to the top, because that is how the price move. When we finish a correction, a very strong impulse move is likely to happen, and that is something that we can look back to be able to see if there's a way to capitalize on it. So when we start looking at potential entries, now we start talking about entries, we talk about stop loss. And let's take a look at a few examples here. So I would say, first of all, you can see that the inverse head and shoulder is the first sign of a potential reversal. And entering here in the correction, again, is not wrong, right? We talk about is there's no right or wrong in a particular entry. If you fit your plan to enter a trade like this, we know that we would put the entry order above the correction and the stop loss below, right? This is typically an entry or a setup that I always talk about. Set an entry order. We don't take market order. We usually rarely take market order. We want to set entry order, and we want to set the stop loss below the correction. And the target is the top of the overall higher time frame correction. You can always have two targets. My first target would be always the beginning of the correction here. So beginning of this descending channel, that could be the first target. And second target could be at the top, where at the top of the higher time frame structure, right? So there, for me, it's always about having a first potential target and a second potential target. Of course, you can either set a target, set an order where price hits this top. You can potentially close half of the position, whatever it is that fits your plan. I personally don't. I often hear everyone has different management way of doing this. Again, no right and wrong, right? If you're looking to exit half of your position and hold the remaining half to the top, absolutely fine. There's nothing wrong with that, right? Or you can want to hold the whole position to the top, absolutely nothing wrong either. Okay, so it's important to really understand there's no right and wrong in anything you do. It's what fits you as a trader. Everything you do is going to affect you in the pros way and the cons way in trading, right? Double edge, I always keep mentioning. By taking half of position profit here, you obviously secure half of the profit, but you also get the remaining position is cut in half. So that means your remaining profit is cut in half. Whereas if you don't take profit here, I mean you don't close half of your position here and you let the position run. Of course, if it reaches to the top, you make maximum return. But what if it just goes halfway to the top here and then start reversing, and then potentially you lose out some of the profit here? So these are just scenarios that you should think about, right? There's no right and wrong, because you don't know what the market will do. You cannot predict if this move will turn back or go up or whatever. You can manage it, you can change your management, and that's the key here, right? So when we look back at this trade, when we replay this trade here, we're trying to find if there is lower time frame opportunities, right? And this is that first lower time frame opportunity that we talk about, the inverse head and shoulder pattern. And we're going to play this to see if there was any better entries to enter. So as you can see, when this move started happening, I remember I took an entry here that resulted with just a little bit of profit, but you can see that there is a more slanted correction. This is kind of more of an expanding structure. It's a little bit more advanced. It's not something we usually see, but nevertheless, this is a correction here, right? This is still a correction because when I do my backtest later on this particular move, I didn't really see any other entries. I really did not see because the price just continuously impulsively up to the upside, and there's really no more entries in this run that we are looking at this right now, right? This run from the bottom here reached the top very, very sharp. This move was very sharp, but except that this particular entry, I think the only entry that was suitable was down here within this inverse head and shoulder of this right shoulder for the price out. So when you look back at something like this, again, you're going to strengthen yourself in terms of technical analysis because you see this overall descending channel, you see what the higher time frame is doing, you see the inverse head and shoulder, you see that reversal impulse. So when you start seeing live market condition, when you start seeing all these playing out in your favor, the next time you see them, in the live market condition, it's going to be a lot easier for you to identify them and to look for a potential entry. Okay. Hendra, again, this kind of question involves with your trading plan, your risk management, right? You're asking how much percentage target do you think it's realistic for 1 month target duration? Well, first of all, do you have 1%? Are you risking 1%? Right? That's the first question. How many trades are you taking? Are you taking only valid setups or are you taking a bunch of setups? All that changes your overall reward and overall return. So I don't think it's a good question to think about it. Try to think about it. What is your risk management? How are you going to keep your account? Right? Don't think about your profit. Think about your risk management. Right? You can't trade anymore if you have no account. Okay, so if you risk 1% account, if you risk 1%, but how many positions are you taking? Are you taking a multiple positions? Are you going to scale in a bunch of positions? Or do you have a better risk reward? All that changes your overall reward, right? So I can give you an example of myself. If I risk 1%, I follow my strictly management plan. I'm trying to make anywhere from 7, 8, 9% return, and I think that's hopefully fine. A lot of people think, oh, that's too low. I'm making 30%, 40% return. Well, if you're looking for something like that, chances are you're not going to be risking 1%. Chances are you're not going to be taking good higher probability setup. You're going to be taking a bunch of setups, and you're going to be over risking and over trading, right? So yeah, some people who are looking for something a ridiculous return cannot be a good sustainable risk management. It doesn't make sense. Okay, so think about who you want, what you want as a trader. Do you want to be a consistent, sustainable trader, or do you want to be looking for that kind of return where it involves you? It has to make you trade more. It has to make you leverage more. It has to make you eliminate some of your risk management in order to reach that kind of return. But is it sustainable? Is it consistent? Right? You got to think about a long-term sustainability. People who show you accounts where they turn 100 into 1,000 or something like that. You always should, the question is, are they over trading? Are they over risking? Are they revenge trading? Very likely all of the above. And this is why when a prop firms who offer $100,000, they would never want a trader who trade like this. Okay, would you guys agree? A prop firms who have $100,000 for people to trade, they don't want traders to turn 100 into 1,000 because they know they must over risk, over trade, and etc. in order to get something like this. They don't want you to risk 10% of their $100,000 account, which is $10,000 on a trade, which is must be the case if you're trading $100 and you turn into $1,000. You're not risking 1% here by turning 100 into 1,000. That doesn't make sense. That means you make 1,000% return. That doesn't make sense either. Okay, so think about consistent sustainability approach in the long run. People who trade those 30, 40% or want those kind of return usually blow up their trading account, and then that cycle begins again because they're chasing back their money and etc. I speak to way too many traders who are just still in this circle. Okay, I think some of you guys who are listening to me probably are in this circle. No offense here, okay? I'm trying to help you guys, so don't take this the wrong way. Is you're already at a loss right now in trading. You're probably already minus, and you're stuck in this circle right now where you need to you need to make back the money that you lost, but you're not focusing on consistent sustainability approach. You're still rushing into your trades, you're still over trading, you're still revenge trading, and your account just doesn't seem like it's growing, and it's going to fall into the cycle again. You might have a few weeks of good profit. It only takes one day to destroy all that. Okay, many traders I speak to, they always have the issue where maybe for a few weeks they're doing fine, and then in one day they take one or two losses right away. All sorts of emotion kicks in, all sorts of psychological trading kicks in. They start revenge trading, they start entering trades without thinking about their plan. They're trying to make back all the profit that they gained in the last 2 weeks just to lose it all in one day. Okay, so think about what I said here today and think about how to get out of this circle that you're in right now. Okay, stop revenge trading. Stop trying to think about trading as a get rich quick scheme, which is not. Okay, if you want to be consistent and sustainable in this industry for the long run, understand about everything I talk about today. Don't try to look for 30, 40% return. Try to look for good risk management. Try to look for a good consistent approach. Even if you just make 2% a month, that's better than losing 10%, isn't it? Okay, so start thinking your perspective on a positive perspective. That's more important. If you have a large account, making 2 or 3% return a month is very good already. Okay, so stop thinking about trying to make your $100 into 30% return a month. It's not feasible on a larger scale. It's just not, because you might be thinking, well, losing $100 is really not too much in your currency. But what if you're trading a larger account now? Can you afford to be like, well, I'm going to trade 10% here, I'm going to trade 20% because losing $10 or $20 isn't really that much. But what about losing $10,000 or $20,000 a month on a real $100,000 account? Is that sustainable as a trader? I don't think so. All right, so I got a little bit off topic here, but I speak to too many students or too many people who are in that circle still, and I'm really trying to help you guys out to get out of that circle, okay? Hello everyone, nice to see you guys. So those of you who joined halfway, so how many trades I take on average a week? I probably take 15 to 20 trades a month. 15 to 20 trades a month on average. So I'm trying to limit myself to take any unnecessary trades or mediocre trades. Remember, someone who take 20 trades a month versus someone who take like 200 trades a month. Someone can take 20 trades a month and be more profitable than someone who take 200. Okay, because people who take 200 trades a month, they have a lot of mediocre trades, they have a really bad trades, and all your profits are going to cover those losses. Okay, so at the end of the day, your profit cannot cover all these bad trades. Whereas someone who take only 20 trades a month, they have all valid, high probable trades. They're going to have some losses, of course, but your profit's going to cover their losses and then still produce profits at the end of the month. That is the difference here, guys. You taking more trades absolutely does not mean you're going to make more profit. In fact, it's probably going to make less profit compared to someone who only take 20 trades a month. Okay, start thinking about that carefully and see if that makes sense to you, right? Taking more trades absolutely does not mean you're going to make more profit. It's actually usually going to give you less profit because you're going to take a lot of bad trades, a lot of not fitting your trading plans trade, right? They're just going to be mediocre. They're going to be, sometimes they're going to be emotional trades, revenge trade, etc. It doesn't fit your trading plan. Okay. So this is a workshop, my friend. I'm not doing any market update or anything like that. I did that yesterday. I will do that a couple days from this week. But this is a workshop on backtesting and everything. So I won't go through any market updates or anything like that. Okay. So let's move on. Okay. Let's move on to other examples. We just going back to what we have discussed so far on backtesting. We went over this technical aspect of the benefits of backtesting. We went over those. We also went over the psychological benefits of backtesting, and this is kind of the more important part. I often keep hearing about the traders who are having these issues, right? Fear of missing out, fear of losing. Uh, Backtesting will help, right? Building confidence in your trading ability. Again, when you see a move that plays out over and over again, you're going to build confidence in yourself now, right? Because you're identifying these setups at the live market condition, and you will see if your management, your trading plan is suitable for that kind of run in the market that you can capitalize on. And remember, hesitation and doubts that leads into the fear of losing. You're having hesitation or doubts because you're fear of losing. It's pretty straightforward, right? You're afraid to enter. You're afraid to enter because you're afraid of losing. Okay, so imagine this very clearly: is you're trying to, by backtesting, you're training your brain, you're shaping your brain to get ready for the next entry. So the more you do, the more homework you have done, the easier it gets. But why is traders not getting it? Well, the traders are not putting in the time and effort, guys. You must do this in order to be a better trader. It's like the same thing as you must journal your trade to get better, to become a better trader, right? You can journal, I always talk about this, you can journal your trades however you want, right? You don't have to journal the same way of how I do it or how everybody, you can do a simpler way, you can do a more efficient way. Doesn't really matter. But the whole point of us journaling a trade, whether if it's in a loss or whether it's in a win, you need to journal your trades. You need to write down your management, your approach, your mindset at the time. You need to do this consistently for every single trade. This is how you're gonna get better as a trader. Okay, I can't stress this enough, and it's the same thing as backtesting. When I ask students when they're having trouble in trading, I ask them, well, do you have a journal? They say no. Do you backtest? No. That's always the answer I hear from people. And I always ask, well, if you're not putting in the time and effort, you're not putting in chart work time, you're not putting in the homework time, what makes you think you're gonna be a better trader? Right? That's always the question I throw back at them. You guys often hear about 90% or let's just say 95% of the trader fails. Okay, this is a pretty statistical fact. 95 of retail traders fail. Okay, sorry to say that, but that is the truth. Maybe other firms out there, those lessons or signals, they won't tell you this, but 95 traders fail. So that means only 5% traders succeed. Yes. So a lot of traders are complaining, well, I'm not profitable, I'm not in that 5%, I'm not making money. Why? And I asked them, well, did you do backtests? No, I didn't do backtests. Did you do journaling? No, I didn't do journaling. So let me throw you this question. You want to be a 5% trader who are making money, but you're not even putting in the work that the 95% traders are doing. You need to put in more work than the 95% of the traders who aren't doing it in order for you to be successful. So if you're not even putting in the work that the 95% are doing, what gives you the right to be successful? Okay, I'm trying to talk a lot of people into some sense here. So excuse my emotion when I'm trying to express this because I hear this too many times and I'm trying to express this as much as I can here. You want to be a successful, profitable trader, which is 5% in the world or 5% in the trading world, but you're not even putting in the work that the 95% are doing. So how can you be profitable if you can't even beat the 95% of people who are doing that already? Within these 95% people who fail, they obviously, some of them are also doing backtesting. Some of them are also doing journaling. They're just not profitable yet. But if you want to be the 5% who are actually making money, but you're not even putting in the work, does it make sense for you to be profitable? It's not even fair, right? These people in the 95%, they're putting in so much work and effort. They may not be profitable yet, but they're leaning towards it. But you want to be profitable, but you haven't even put in the work. It doesn't make sense for you to be profitable either, right? So start putting in the work and time, start putting in the effort. That is going to help you to be a better trader, right? A consistent trader and a profitable trader in the long run. Okay. Hey, thanks so much for the coin. I appreciate that. Thank you so much, Visionary. Thank you. Ziggy asked, when you're trading impulse and correction, do you take support resistance indicators and news into consideration? I don't take any of those into consideration. Okay, so I don't take support resist I don't take in support resistance indicators or any news. In fact, okay, I made a video about this. If you're interested, you can take a look. It's about does news affect price action analysis in trading. The prime example that I can give is that Kiwi dollar position. Uh, when the news happened, this is the FOMC meeting news. So we have this news event that happened, and then just to shape up into a continuation correction to go lower. Okay, so I don't take into news consideration. That's because from my point of view, the news can create volatility, but it doesn't create the overall direction. That's one thing. And I don't trade support resistance because in support resistance, when people join like this, you would never capture the impulsive move because you're always trading through some sort of support resistance. Okay, it's not that support resistance doesn't work, it's that when you're pairing up all these analysis, it creates conflict, right? It creates conflict of interest because I want to enter an impulsive move, but I also see a support resistance right here, right? I don't even trade support resistance. I can right away point out that this is a support resistance right here, right? This is a support resistance, 1, 2, 3. So in order for you to get the impulsive move, you're always trading through some sort of support resistance. And even for myself, who's not a support resistant trader, I understand that you're not supposed to trade through a support and resistance. That's why it's a support, right? So I think that's why I don't use any of those. And I don't use indicators. I don't use any EMA lines, whatever. Same idea, right? The EMA line or MA line is going to go like this. And again, the strategies out there, they're not going to tell you to trade through the EMA lines or the MA lines. It's the same thing as why you don't trade through some sort of support resistance. It's the same idea here. Okay. How is it important the third touch when looking at higher time frame structure? To me, it's not important. I know people always think about third touch is a must. I don't think a third touch is a must at all, in my opinion, at all. In my opinion, personally, this is just a two-touch structure. This is a two-touch structure. I talk about having two touch is a minimum. 3, 4, 5 better, but it doesn't have to. I always often hear people think that it has to go to a three. No, it doesn't. It can just be a two structures and price continue to push down. Right? Is this a two-strong structure? It is, right? This is all we need is this two, and then we continue, right? So it doesn't necessarily need to be three, as what people always kind of think that's the case. Of course, three is better, but it's not necessary. When we look at backtesting, when we done enough backtesting, what it makes a structure is two. Two swing highs and low already complete the structure. That's from my years of backtesting and looking at the chart. We don't necessarily need three. Three is better, four is better, whatever. As the correction goes on big, deeper and longer, the better it is, yes, but it's not necessary, right? It's not necessary. Look, in this example here, the more is better, right? 1, 2, 3, 4. The more is better because that gives you that good correction here for the downside. But 2 is all we need, right? I always talk about 2 is all we need. We don't need to have 3 necessarily. Okay. Backtesting is always interesting, but when I go for a live chart, I really don't understand the market. Well, you need to do more backtesting, Prince. There's really no way around it. If you feel when you're looking at the live market condition and you have no clue what's going on here, then you really need to work on backtesting more. The whole point of backtesting, as what we've been saying, is you're getting your technical aspect there, you're getting your psychological aspect. So when you're looking at the live market condition, you will not hesitate, you will not have doubts, you will not have fear, you will not have FOMO. That's why we do backtests, right? It's just a thing that you must do. Okay, I can't stress this more enough. Your success, any trader's success ultimately comes down to their time and effort that they put in. Do they backtest? Do they journal? If they don't do any of those, I'm sorry, you're not, that trader is not likely to be successful. It's not simple, right? It's like when you go for an exam in school, why do you do homework, right? Because you study the questions so you're better prepared for the exam. It's the same idea here. So it's just trading the way how social media portrays it. It's like some people who are some trading guru, they're like, oh, if you buy into my course, you're going to be successful in no time. That is usually their selling catch, right? That is how they advertise themselves. They're saying their strategy is the best, their courses are the best, their lessons are the best. If you pay me this, you're going to be successful. Unfortunately, that is the trading, that is the industry that we're in, right? Everywhere you go on social media, that is what people show you, and that is not the case, unfortunately, right? They are selling you something, they're selling you something that is using your emotion as an advantage because we are human, right? We have emotions, and human beings are lazy, sorry to say, right? We're all lazy in some way, and we're like, oh, well, if I buy this, I can instantly get rich. Oh, yeah, I'm gonna buy it. That's what people's mindset is. They think, okay, if I buy this, if I pay this, I'm gonna be wealthy in trading, and that's they're using humans' emotion as a tool. Okay, so remove those emotion, remove those. If you ever really want to be consistent, profitable trader, you just need to put in the time and effort. There's no way around this topic. Okay, and even if you buy into some trading guru's course or lesson, you still need to backtest it, right? You still need to work on how to enter those. It doesn't come to you so naturally, no matter how they explain it, no matter how they show you how they do it. You still need to put in the time anyways. So this is why I always say you can have the best strategy in the world, wherever that strategy is. You can have the best strategy, the best mindset, the best emotion, but if you don't use that towards, if you don't have the right mindset, if you don't have trading psychology in place, if you don't have a trading plan, you don't have risk management, um, having the best strategy in the world is not going to help you to be a profitable trader because uh, you can't even follow your trading plan when it comes to trading, right? If you take a few losses, you get emotion, and then you start randomly trading. You're not even following your strategy anymore. That tends to happen for newcomers, right? They follow some plans, they're doing well for a few days, they take a couple of losses, the emotion comes in, they start executing trades on their phone, and then just to blow up their account, and then again, that cycle repeats, right? Yeah, hand drawn, that's a good point. Backtesting first, demo account, and then live. That's a good point. So backtest, demo, and then trade live. If you feel uncomfortable trading live market condition, if you have not much clue what's going on here, then you don't have to trade on the live account yet, right? Trade on the demo account or whatever the case may be, and then slowly get into it. So what do you identify on each time frame as your ideal setup from weekly to 15. Again, this kind of deviates from the plan, but you can watch a bunch of videos I made, something like this. I talk about risk management, right? Entries on the impulsive phrase. There's 3 entries I usually do. Um, you can watch my multi-time frame analysis video where I go over how I do this, but I'll do a very quick way of breakdown. So we talk about, let's go into like some of the indices. So let's look at the indices. So we saw coronavirus had the market crash, and I made several videos on this on the indices backtest. You can watch those as well in my video. But if I was looking for an entry, if I was to look for a particular entry like this, so we know that the coronavirus move has happened. We know that, right? And price is in this kind of ascending channel structure, right? You see how most of the indices are always going to move up, move up, move up, move up, and just to see the sharp crash. We see it play out all the time, right? Again, this is why we backtest, guys. When you see these play out over and over again, you have no question, you won't have hesitation when you're identifying these setups anymore because they happen all the time. So we're looking at this latest bit of the market crash from coronavirus, right? So we replay to before the market crash. So we go down to the lower time frame. How to look for a potential entry? Well, first of all, your higher time frame bias. My higher time frame bias at the time is bearish, right? Because your prices continue moving up, but we need confirmation on the lower time frame. So let's see how it plays out. So right away, you can see that within this larger ascending channel, there is a smaller ascending channel. So structures within structures. And we have a first impulse, first correction, right? This is a continuation correction. This is even a correction after breakout. If you look at this correction here like this is considered to me a correction after breakout, right? So that is the first entry, right? That is the first entry. You can set the stop loss like this, enter like this, and set the stop loss above the high as I usually would do, and see how the price plays out. So first target usually at the end, beginning of the correction, and then second low will be the second correction, so and so. So you can see that price is pushing out now, and we're gonna keep replaying this and see what happens. Was there another correction? Yeah, there is another correction once we broke out of this higher time frame ascending channel. So that is your second entry right here. Right, your second entry should be here, or that will be your first entry if you didn't capture something like this. Remember, this is the riskier trade, this is the safer trade. But the safer entry is going to give you potentially less profit, and the riskier trade is going to give you the most profit, right? If you look at this all the way down to the previous low, then you can maximize quite a bit of profit. Whereas if I was to enter here, if I was to enter at the correction after breakout of the higher time frame correction, my reward is obviously diminishing, but I can still capture 3 to 1, and that's the difference of it. Okay. Right. So this is why we backtest, right? This is why we backtest different market, different time frame, so that it gives you, it's pretty much second nature to you when you look at this in the future, when you know, okay, well, we see a higher time frame structure, we see potentially a lower time frame correction in the making. This is the first impulse. This is really the first correction, first bearish continuation correction for this move. So entering here is valid, right? As long as you understand the risks involved. This sometimes can pull back here like this, right? Just forms a bigger correction like so, and then still drop down, right? So there's always a tendency of that. Now that the price broke out of this high time frame ascending channel, there's a lower time frame continuation, right? So that is the more safer entry, right? This is safer entry because there's a correction after we break out of the higher time frame correction. So that's going to give you more confluence, more positive confluence to be looking for a potential sell. Okay. Introduce a good broker for Forex. I don't do any introducing broker like trying to make you sign up and then I get a pay or something. But I personally use Oanda, I use AxiTrader. Those are the two Forex brokers I use. Jojo, a lot of traders say they don't go back to the same trade, particularly with stock, once they have taken their profit. Is that also true for you? What do you mean by go back to the same trade? Go back to the same trade to look at their entries and things like that? Or what does that mean exactly? I don't really understand what I mean. Get back immediately after you exit the trade. So you enter here, you exit here, and then you get in again. Is that what you mean? So anyways, let's move on. I think I said pretty much everything I wanted to say, but I'm happy to answer some question now. I kind of go over pretty much everything I wanted to discuss. So to recap everything, just so that everyone who join me later on or halfway, while we backtest, we understand we're training. There's what we're shaping our brain into giving us technical benefits and psychological benefits. So technical benefits is obviously you can learn identifying your strategy a lot better, right? Everyone trades differently, so you need to backtest to see your strategy play out and etc. Learn to work with your strategy to your liking, right? Even if you're trading support resistance, there's way to modify it or tweak it so that it's towards your liking. It's the same as why we trade impulse and correction. We can tweak it to your liking and again, practice your entry, right? This is why we backtest. We practice your entry, we practice how to set stop loss, set take profit, etc., and your management behind the trade. Okay, and psychological benefit is more important because it removes FOMO and removes fear of losing. Those are the two biggest things that the traders, new traders, often experience is fear of missing out or fear of losing. Okay, so by building confidence by backtesting, um, you will strengthen your ability in trading, right? You'll be better at analyzing the market. You have better management approach now, and you'll have a better trading plan when it comes to different scenarios. Okay, so enter the trades without hesitation or doubts. That feeds you right back to fear of losing. Okay, so start putting in the time and effort. I can't stress this enough. Okay, those of you who watch this after and don't do this, and then you're not going to be a better trader. There's just no way around it, okay? There's no way around it because you have to put in the time and effort. You have to backtest. So when you enter trades, you won't have hesitation, you won't have doubts because you already seen them play out over and over again. It's the same thing as journaling the trades. It's the same idea here, guys. You just need to put in the effort. Okay, those of you who don't put in the effort, don't expect to be that 5% profitable trader, okay? Because you're not putting in more work than the 95% trader that are putting in. You can't expect to be in the 5% profitable trader without putting in what the 95% people are doing. It just doesn't make sense, guys. Okay? Start thinking about what I just said. Start thinking about the statement I just said. If you don't put in the time and effort like everyone else does, what gives you the right to be profitable? Because you purchase someone's course, because you learn from someone's signal, doesn't make sense, right, guys? You need to put in your own time and effort in order for this to work. You can't just what people call instant gratification. You instantly jump to success. That's not how anything works, especially in trading. Okay? Thank you, Trading View. Nice to see you around. Perfect. Okay, so any question on this? Any question on this topic? I just want to kind of just wrap it up and see if you guys have any questions or related to backtest or why we backtest. The benefits of backtesting, we mentioned technical benefits and psychological benefits. How we backtest, I went over using TradingView's replay feature, and I think that is pretty much summarized everything we talk about. But if there's any questions, I'd like to answer some questions. Malkela, yeah, thank you, Jojo, everything you said in all your videos, which I'll continue to watch on repeat. Your blessing. Thanks again. Hey, no problem. Appreciate it. This is why I do these. I just want to help everyone to understand that how trading is from my years of experience and from my my knowledge, I guess. Really, the key is to really understand. Don't let the social media affects you as a trader. Okay, this is another topic I want to touch base on. Don't let the social media affect you as a trader. Why? Social media, everything you see is going to be some MT4 showing their profits, blah, 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 or showing someone who entered at the top and sell at the bottom. They're showing off their profit, they're showing off their car, they're showing off their whatever, right? Whether or not they're real or not, you would never know, let's be honest. Today's world, 21st century, Photoshop, fake things everywhere in the world. It's so easy to fake stuff. It's so easy to just uh, make people believe what they want to believe, okay? So think about all that is not applicable to you because at the end of the day, you're the one who's trading your trading account. So it really doesn't matter what you see out there, what people are doing, oh, they're making this much return, blah, 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 blah. It's not applicable to you, right? So focus on yourself and your plan. Okay, you as a trader, at the end of the day, you want to be doing this for the next X amount of years. Yes, you're not here to just trade 1 year and you think you're going to make all the profit in the world and then you're going to quit trading. That's not how it works, right? If you want to be a trader, you want to be a trader for the next 30, 40 years. And you want to consistently trade every single year and consistently generate profit and consistently compound your account, right? So that's how trading is. It's not about making some 30, 40% return a month or double your account in 2 months or something like that, because that is surely with over leverage, over trading, and revenge trading, right? That's how, if you do that, you can't prevent yourself to fall into that circle that I talk about over and over again, because by over trading, by revenge trading, by over leverage, you're gonna accelerate yourself to into blowing an account, and then you're going to keep repeating this process. It's a never-ending cycle. It's like a black hole. You just keep falling into deeper and deeper because you're not getting out of that hole if you don't understand that all you're doing is not healthy for trading. All you're doing is not setting yourself up for success, right? Everything you do in trading, backtesting, journaling that I talk about, you're setting yourself up for success. You're not setting yourself up for failure. Okay, you're setting your future self up for success by doing backtesting, by doing your journals, by doing chart work, by reviewing everything you're doing. That is why you do it. You don't do it because it's tedious or you don't want because this guy told me to do it. You're doing it for your own good, right? You want to be a better trader, then work on these aspects. There's no quick way around it, right? I always talk about you can have the best strategy in the world. You can have the best. You pay $10,000 for this strategy. Some crazy guru tell you that this is the best strategy in the world. Maybe it is. Maybe it is. It's not. Who knows? But you pay 10,000 for the best strategy in the world, and you're still not profitable. Why? Well, you're not applying it to your trading, right? Are you backtesting this $10,000 strategy that you bought? Are you journaling down the trades that you took? Are you working on the strategy itself? Are you actually understanding the entry, the stop loss, and management? Do you actually consider that? Are you actually trading with a very healthy way of consistency, or are you over trading, over leverage, and over revenge or revenge trading all your losses? Right? That's why you journal your trade so you understand, did you make an emotional decision on this trade or did you follow your plan? There's a question earlier we talked about how to minimize the pain that you get from losses. Losses are part of trading, guys. There's no way of everybody take losses. Professional traders take losses, consistent traders take losses. It's about how you keep the risk at a minimum and keep your reward big. You can't simply not take any losses. Losses are part of like expenses in business. It happens, right? Think about profits are like revenue for the companies. That's all you have to think, right? Any business will have expenses and revenue, just like any trader will have losses and profit. The gain goal here for business is to have more revenue to cover your expenses and to minimize your expense. Same thing as trading. You want to have more profitable trades than losers trade, and you want to minimize or cut down on your losses. It's never going to be zero, just like a business will never have zero expense. Okay, so start thinking that will help you a lot better in trading to understand this. Okay, and we talk about the psychological benefits, right? Fear of missing out, fear of losing, guys. You're gonna hear me repeat this all this whole workshop is you need to understand why we backtest because too many traders still have FOMO and still have fear of losing. It's no, and the best way and the most efficient way is to backtest. When you see the chart play out every time, when you see how a move plays out, you slowly remove FOMO. You slowly don't have fear of losing anymore because you will no longer have hesitation or doubt. Those of you who follow me since last year, every time when I do my streams, every time when I talk about entries, I never have hesitation or doubt to enter. If I enter a trade, I never hesitate, I never have any doubts because I'm already accept the fact that I can take a loss. Remember, every trade I enter, I always say, I already accepted that I could go on into a loss. Already, the mindset is different here. The mindset is different. When I enter a trade, I already tell myself, well, the most that can happen is I take a loss here. So that's 1%. So what, right? And but that's the worst case scenario. But if the trade works out in my favor, I'm going to get 3%, 4%, and that covers my losses and then some. So the mindset perspective, when you enter a trade, I never enter a trade with any hesitation or doubts because I backtest my strategy, I backtest the way how the market moves, I backtest the entry, I backtest the stop loss, I backtest the take profit. Everything you backtest enough, it comes to you second nature, and I'm just going to execute without fear, without FOMO. Okay. 14,000 for a course. Wow, that's a lot. So I'm reading some question here on YouTube, guys. So I'm just kind of going back here. What's the difference between backtesting and separate pattern analysis? It's totally different things. You're talking about separate pattern, meaning that you're just separating the patterns, right? We're not, it's the difference between backtesting. So I'm not sure what that question meant, sorry. Rolando, do you set your entry at the lower low of the lower time frame correction? Is that what you mean, lower low? Or do you enter when the price breaks the lower trend line of the lower time frame correction structure? Um, I'm not sure. I don't know if I understand your correction correctly, but um, like if an example is if I was looking for an entry like this is a first impulse down, first correction. Uh, this this you can have a few ways. I usually set the entry right below, or you can set the entry here. It's not that big of a difference, right? As long as your stop loss covers the highs or gives the room price a little bit of price to move, I think it doesn't matter, right? So like 5, 10 pips, I don't think that matters too much. For me, usually I'm gonna have a little bit wider stop loss. That's just for me preference, right? I can make it 40 pips, but it doesn't really matter to me. I'm just usually gonna give myself a little bit more room. This just come from kind of my years of tweaking my trading plan, tweaking my risk management. Before I would probably set a 40 pips stop loss, but as my years of experience continue, as you have bigger accounts, slightly bigger accounts or more money you're trading, you care about risk management a lot more than profits. Okay, that's really the difference. How I evolve, or I continue to evolve till this day, is I care about risk management more. I care about profit. I don't even care about making profit. I care about not losing a particular trade. That's the difference here. I care about giving myself a little bit more room for the price to move. Maybe I get a 0.5% or 1% less, but I protect my trade more if that's going to correct like this more and then still drop. I think that's what you're saying. Hopefully that makes sense. When you backtest, which time frame you use? Every single time frame. Every single time frame. As long as you go to, um, let's say for example, you want to backtest. Let's say if you're looking at any market, anytime you want to look at the higher time frame and then you backtest. Doesn't matter. You backtest when a correction is about to finish, right? We talk about, let's say this is a correction here. We're looking for a potential entry. We see this play out already, right? We see this move play out already. So you can backtest whatever the higher time frame is about to have the next impulsive move. So in this case, if you backtest to this point, we know that there is an impulse move that has happened. You backtest to before the higher time frame completes, and you can drop down the time frame, let's say 2 hour, 1 hour, so you can actually see the price a little bit more clearly. You can see these correction a little bit more clearly, and you can see the correction, continuation correction or reversal correction a lot more clearly by going down to the time frames. Okay, so you can click between the time frame to see the charts differently like this. Okay. All right, so any other question? Any other question on backtesting or any other relevant to our workshop or to this topic today? I'm happy to answer more regarding this topic particularly. I'm sorry, Amir. Hey, bro, is it possible to make 10,000 US dollar using $100 capital in a month? What do you think, my friend? What do you think? That's what you're saying is you use $100 to make 10,000 a month. Is that what you're saying? What do you think? Do you think that's feasible, my friend? Not here to tell you anything otherwise if you think that way, my friend. But that's why so many social media out there are targeting people like yourself who believe that's possible, my friend. Okay, so I spend quite a bit of time talking about, consistency, sustainability approach, understanding you're not here to get rich quick. So using $100 to make $10,000 in a month, tell me if that's feasible or not, right, my friend? So, all right. Any other question, guys, before I wrap this up? I don't hear much question now. If there's other areas that you guys want me to go over, happy to do so. But I think this is all that I want to talk about, at least for today's workshop on backtesting. really understand why we do it, okay? I know I've been repeating this whole session, but I really want you guys to understand your success in trading ultimately comes down to your work ethic, okay? Your success in trading ultimately comes down to your work ethic. If you don't backtest, if you don't do journal, you don't work on your charts, you don't work on your psychological emotion and mindset, you're not likely to be a profitable trader. It's that simple, guys. Okay, it's the same example. I'm going to say it again. 95% traders fail. Okay, they all fail in some point, sometimes, or at some point, they're going to blow up money and they give up in trading. So 95% fail. So in order for you to be in the 5% traders who are actually consistent with making money, you need to put in more work than the 95% isn't doing. Okay, think about this statistical meaning. If you want to be a profitable, consistent trader in the 5%, but you're not even putting in more effort and more time than the rest of the 95%, then logically, it doesn't give you the right to be successful, right? That is the fact, right, guys? Start thinking about this statement here, and the moment you understand, the moment you acknowledge this, the better it is for you to be a trader. Okay, so really understand this statement here. It's going to help you to be a better. All right, so think about this really makes sense. Put in the work more than the 95% of the people out there who trade. Put in more effort, put in more time, put in more chart sessions, put in more controlling your emotions, psychological aspect than the 95% traders. If you're not willing to do that, then please don't, you know, don't complain that you're not profitable or you're not making money because you haven't put in the time and effort than the rest of the people. It doesn't give you the right to be consistent or profitable in that case. Okay, so start thinking about this statement. If you click it, if it makes sense, you will have a pretty good future in trading. If it doesn't, because you're like, well, I don't want to put in the work, I don't want to do this back testing, I don't want to put in, I don't want to journal my trades. That's homework. I don't want to do all that. If you're not planning to do that, you're not likely to be profitable. You're not likely to be consistent. That is the case, guys. Really think about this, okay? That's how the YouTuber promote their trading skills. Well, yeah, social media, again, people are still buying into that, and people are still buying into that. So it's up to everyone to make their decision whether someone says turning their 100 into 10,000 is feasible or understanding a sustainable, consistent approach. Okay? Hendra, how do you maintain emotion or keep your emotion in check? Um, I'll break down this a little bit more, but I was never who I am today, right? Everybody start off somewhere. The typical graph you're going to see like this, right? That's how it is looking like, you know? At first you begin, you think trading is so easy, you make some money, trading is so easy. I don't know why these guys are saying trading is hard. And then when you start falling down, when you start losing money, most traders give up here. Most traders give up here, right? I think everybody agree. The typical chart you see of the trading journey, most traders give up here. Most traders give up here. Okay, but when they actually fight through the consistency level, when they start fighting through this profitable, once they take off this, you're never coming back here. Okay, you're never coming back here. It's the same as that story I would talk about consistency. Most traders, the 95% traders are here below consistency. But the moment you break consistency, you're never coming back here again. Once you're above consistency, you're just going to take off. You're not ever coming back below consistency again. So you understand that the years of the work here leads into this, and once you break consistency, you will just continuously take off. You're not coming back below this. Okay, so it's the same as the emotional side of things. I used to be emotional. Everybody used to be an emotional trader before they find consistency or they have this in check, right? Um, what works for me is again trading plan. So I tell myself if I take more than 2 or 3 losses in a row, my plan is to take like 2 days off or something. I would completely shut off my phone or shut off my charts. This is back in the days when how I'm planning to control my emotion. I would just turn off my computer. I would not look at the charts for the next 2 days after I take 2 or 3 losses in a row. Okay, that's the way how I prevent myself again to fall into that circle, right? To prevent myself to falling into that over trading, revenge trading, and over leverage. Because after you take a few losses, right away, what do we want to do? Revenge trade, right? Everybody wants to do that in the beginning. Myself included in the beginning of my trading journey. You're trying to revenge yourself. You're trying to revenge yourself or revenge those trades that you just took that are losses. So I remove that emotional decisions by just simply not trade or not look at the charts for the next 2 days. That's how I control my emotion. And as time goes on, as you do more journaling, as you do more backtesting, honestly, my emotion just slowly goes away when it comes to trading. And I can't stress this enough is when you've done enough these backtesting, when you've done enough journaling, when you've done enough chart work, slowly but surely the emotion side of things just slowly gets removed from your brain. I'm not saying I'm not an emotional person outside of trading, right? I'm an emotional trader. I mean, I'm an emotional person outside of trading, right? You can still laugh, you can still cry, right? That's part of us as human. But when we're trading, uh, I can remove the emotion side because I know that's how traders will fail if you have emotional decisions. You try your best to remove as many emotional decisions as possible. That's going to help you to be a better trader in the long run. Okay. Do you have any template to record trading journal? Make your own, my friend. Make your own. It's simple, right? You don't need to follow any other people's, right? All you really need is a simple way of me how we do it, right? You just write down your enter exit date, your time, what instrument you're trading, like market, what's your direction, what's your setup, what's your return. You can do what I do. I post on TradingView. It's a chart that breaks down my my setups, my everything like that. If you don't feel comfortable making a chart, you don't feel comfortable making an analysis like this, then just write down point forms, right? Write down point forms like this, blah, blah, blah. What is your trade confluence? What are you looking for? How are you going to enter? And then have a screenshot after when the trade closes, and then write down what's your management behind it, what's your review, what's your psychological, what's your mindset about it. It's that simple. You don't need a template, right? Having some fancy template doesn't give you a better journal or it doesn't help you to be a better trader. It's actually what you screenshot and what you write in your management psychological aspect is going to help you to be a better trader. Doesn't matter what template you use, it's not going to help you to do that part because you are the one typing out this section here. All right. How to trade high probability. Made several video on this. How to trade. How to identify valid high probability price action trading. You can watch this video. It will explain more. All right, everyone. So I think that's it. I think that's it. I'm gonna wrap it up now. Unless any last minute question, but I think this is where I will end the stream. So I went over all the topic. I went over all the importance of backtesting, and I hope this workshop or this stream today will help some of you guys to understand trading is a marathon. It's about consistency and sustainability. It's not about get rich quick. It's not about trying to double your account. It's about working at yourself, right? Making yourself to be a better trader. You're not doing back testing for others, you're doing it for your own good, right? You're back testing so that you get better from a technical perspective and you get better at a psychological perspective. So really understand why we do back tests. At the end of the day, No one is going to trade your trading account. You're in charge of your trading account. So if you don't put in the effort and time, it's not going to work. All right. So start thinking about, are you willing to put in the time and effort? Are you willing to backtest? Are you willing to journal your trades? Are you willing to give up something in order to gain something, right? It's opportunity cost. People often I speak to, they're saying they're not profitable, and I ask about backtesting a journal. They don't have any of those, and I ask, well, how many hours do you put in on charts? Oh, half an hour here, there. I don't have time. When I hear people say I don't have time, I just want to be like, are you kidding me? So you think you're the only person who's busy? What are you doing with your time, right? And most likely they're doing leisure stuff. They're having fun with their friends. They're going out. They're drinking. They're watching Netflix, blah 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 blah. That's their reason, or that's their excuse to say no time. I have speak to people who are single mothers having a job and then do trading at the same time. So don't give yourself that excuse or saying no time. I think that's all BS. Okay, make time for yourself. Right? People who have less time than you are doing it, and you have a lot more time watching TV, sit on your sofa doing nothing. So don't say you have no time. All right, that's just an excuse to yourself. Right? If you want to be better at something, spend the time, spend the effort at it. Right? Remove those leisure stuff. Remove going out with your friends. Remove watching TV. Remove sitting on sofa, doing nothing, right? Playing on your phone, watching Instagram, blah blah blah. Remove all that time, and you will have time towards this. All right. Do you get something from TradingView by spending more time in life? I don't. You mean like TradingView pays me things for? No, they don't. I don't get any benefits, or I don't have anything like that. So I don't get anything like that. Okay. Yeah, really appreciate it. Nice to speaking to everyone on here. So I'm going to wrap it up here. Like I said, this workshop will be safe on my YouTube or on TradingView. So you can find the workshop here in on my YouTube playlist, or just in the video section. It should be popping up here. Uh, Whenever it completes, you can rewatch it on TradingView. It should be on the stream section as well. And like I said, if you like everything I talk about today, if you like these workshop, I have more to come. I have more topics or more to come. And obviously, I have my weekly updates, market update streams as always. So you feel free to tune into those as well. All right, and I always update everything on my trading Telegram as well. So on my Telegram, I always have all my trading view links, all my streams link, all my educational content, all my updates, etc. That's the best to get all my notification if you like what I talk about today. All right. So that is it, guys. That is it. So I will wrap it up here, and I hope to chat with everyone next time. Hope to see you guys all in my next stream, and be safe out there wherever you guys are. Thank you very much.